Hi, I'm Rudy, founder of Nickel Hayden and a municipal advisor to Texas Public Schools. This is Texas School Finance with Rudy. Here's what nobody tells you. When your community votes yes on a school bond, you are not just authorizing a loan. You are accessing one of the most powerful financial backstops in the entire country. Most voters have no idea it exists. Most school board members couldn't tell you exactly how it works, and yet it has been protecting Texas school communities and saving taxpayers money for over 40 years. Today, we're talking about the Permanent School Fund and why it makes Texas school bonds the safest investment in the municipal bond market. The Permanent School Fund, the PSF, is a sovereign wealth fund. It was established in the Texas Constitution in 1876, built initially from public land grants when Texas was carving out its future as a state. Today, the PSF holds over $65 billion in assets. That is not a misstatement. $65 billion, managed by the Texas Permanent School Fund Corporation and overseen by the State Board of Education. When a Texas school district applies for and receives the PSF guarantee on their bond issuance, the PSF becomes the backstop. If the district ever fails to make a required bond payment for any reason, the PSF steps in and makes the payment directly to investors on the district's behalf. The state then works to recover that payment from the district. But the investor never takes a loss. The payment arrives on time, every time, guaranteed by a $65 billion fund with the full backing of the state of Texas. When Hard Knocks ISD issues bonds backed by the PSF guarantee, they are effectively borrowing with the credit backing of the state of Texas. That's a AAA rating, the highest credit rating that exists. The difference between a AAA rate and a lower rated rate might sound small, maybe a quarter or 0.5%, but multiply that difference across hundreds of districts issuing bonds every year, and the savings become staggering. According to the Texas Permanent School Fund Corporation, their words, not mine, the bond guarantee program generates an estimated $400 million in cost savings every single year for Texas school districts. $400 million annually that stays in local communities instead of going to investors as interest. That translates directly into lower property tax rates for Texas homeowners. And here's the stat that really puts this in perspective. Since the bond guarantee program was established in 1984, over 40 years of operation, the program has guaranteed 8,807 school district bond issues totaling $268 billion. And in all of that time, across all of those transactions, there has never been a single default. 0 defaults in 40 years on $268 billion in bonds. That is confirmed by the Texas Education Agency, the PSF Corporation, and every major bond rating agency that covers Texas school debt. It is not marketing language. It is the verified historical record. And that track record is exactly why the PSF Bond Guarantee Program is the largest AAA rated bond guarantor in the entire United States. When you walk into a bond election, you are not just voting on a construction project. You are voting to access this system, a guarantee built on public land grants from 1876, a guarantee that has never failed, a guarantee that saves your community $400 million every year. That is a legacy worth understanding, and it is a legacy worth protecting as you think about how you vote on school bonds in your community. If this gave you a new appreciation for something you didn't know Texas had built, share it. Put it in front of someone who is going to a bond election without this context. Follow me on LinkedIn, where I break down Texas school finance every week. And if you represent a Texas public school district and want to talk about your bond program and how to maximize the PSF guarantee, come find us at nickelhayden.com. This is exactly what we do. Episode 8 is next. And we're going to walk through exactly how a school bond gets passed, from the boardroom to the ballot box. See you there.